So Caro's right. They surprisingly release earnings. They do an equity offering, and Roaring Kitty is going to speak in 28 minutes' time. Explain what's happening, please.
And so much is going on. So we'll start from the top. The stock was up double digits overnight and into this morning after rallying about 50% yesterday as Keith Gill teased a return to YouTube for the first time in 3 years. We then saw GameStop pull forward earnings. It was scheduled for Tuesday. They surprise released them this morning and then quickly announced that they will launch an at-the-market offering that could sell another 75 million shares, which on current levels for that stock could raise close to $2.7 billion. Again, they did this back in May, raising almost $1 billion after Roaring Kitty made a return to X. So all eyes and ears will be glued, as you mentioned, in 28 minutes, 27 minutes onto Roaring Kitty's YouTube page to A, confirm if it's still him, and B, try to get some sense of what's going on with his investment, which he's touted on Reddit and also has really posted over the last 4 weeks, pretty nonstop on X.
And that could be worth almost $500 million now, according to your maths, when you're looking at the overall holdings of shares and options. There's so many directions to go here, Bailey, because we could focus on the fact on whether GameStop itself is exploiting this moment and shareholders by diluting them yet further, or whether they're being savvy. We could also dissect the fact that here is Keith Gill potentially, even manipulating the market. That's something that we're starting to hear talked about.
Yeah, that's a concern. We've seen the Wall Street Journal reporting that E-Trade is considering banning him from their platform, which makes me feel a little bit better if they're in fact actually can confirm that he is taking these stakes and making these investments in the company. But Caroline, the main thing that stands out when you look at kind of the concern around market manipulation, when I talk to securities lawyers, you need to be able to prove an intent to manipulate the market and follow through on that. So far, he hasn't sold the stock, as far as we know, according to those screen grabs. He hasn't done anything with those options. So it's really a weird area that has not really been discussed in the past. But one thing that did stand out when I was talking to an investor this morning is he said back in 2021, a lot of us thought it was funny. No one is laughing right now. The SEC seemingly is investigating, and E-Trade, obviously, and Morgan Stanley are looking into it.
I actually get all of that. I think it's worth a bit of a history lesson here. So, I joke, but GameStop is a physical retailer of video game stuff and associated memorabilia. And, as depicted in the film Dumb Money, when Roaring Kitty, a.k.a. Keith Gill, started all of this, his explanation was, as Caro pointed to, like he believed in the fundamentals of the business. Just give us that historic context, Bailey.
Yeah, if you go back to 2020, sales were slumping. There was a lot of uncertainty around what the fundamental argument for GameStop in a world where people are increasingly downloading video games is, and how the COVID dynamic would actually shift that, because if you play a video games on your PlayStation or your Xbox, you don't have a need to go into a physical store to buy those games anymore. His argument was that the stock was so beaten down that there was an opportunity. He also was the first to call out the fact that about 140% of shares were sold short. So a short squeeze had kind of been ripe for the opportunity. He also kind of tailed the investment from Ryan Cohen, who's now the CEO, that he took in late 2020 and then added to in 2021 when he ultimately took over the board. So when you look at the history of Keith Gill's position back to 2020, when people really were ignoring him because the stock was going down and he was just someone on YouTube talking about investing in the stock, some of those aspects did kind of come to fruition. The main thing that analysts and investors point to now, though, is the stock right now was trading with a north of $15 billion valuation. So the argument that his deep value analysis that played out is kind of potentially overdone, just given the fact that the fundamentals of GameStop, as we saw with the quarterly results, are not improving. We do not have a real argument for what the path forward looks like from Ryan Cohen. And when you look at it on a fundamental basis, which analysts prefer to do, there's a lot of uncertainty in just how you could get to a $16 billion valuation given drying and slowing sales in a market that seemingly is continuously squeezing GameStop out.